Which credit score do mortgage lenders actually use? Not the one on Credit Karma. For mortgages, it is almost always your classic FICO score, specifically FICO versions 2, 4, and 5.
In this video, we will break down 3 key areas: the specific score lenders pull, what your options are if your score is below 580, and answers to the most frequently asked questions from homebuyers. First, let's understand the score that lenders pull. Mortgage lenders use a tri-merge credit report. This pulls your FICO scores from Experian, TransUnion, and Equifax. The lender then selects the middle score of those 3. It is not the highest score, and it is not an average. When multiple people are on a loan, we determine the qualifying score by taking the middle score for each individual. The final qualifying score used for the loan is the lower of those 2 middle scores. You may notice a difference of 20 to 60 points between consumer apps and your mortgage FICO. These apps often use a different model, the Vantage score, which is built for a different purpose than mortgage lending. While consumer apps are great for tracking trends or catching errors, a mortgage lender's pull is the official number that sets your program and pricing. Next, let's look at options for scores below 580. A score below 580 does not mean you cannot get a loan. FHA loans may allow scores down to 500 with a larger down payment. You might also consider manual underwriting or a lender-ordered rapid rescore to update your credit profile quickly. With manual underwriting, an underwriter evaluates your rent history, debt-to-income ratio, cash reserves, and job stability to assess your overall credit worthiness. A rapid rescore, ordered by your lender, can reflect paid-down balances on your credit report in as little as 3 to 7 business days, rather than waiting for your next reporting cycle. Finally, let's address some frequently asked questions. Each loan program has its own minimum credit score requirements. For instance, most FHA loans require at least a 580, while conventional loans typically start at 620. VA loans have no published minimum. Does a higher score get a lower rate? For conventional loans, yes, pricing occurs in tiers. However, government-backed loans like FHA and VA are generally less sensitive to your specific score. Finally, Kentucky Housing Corporation programs can offer up to $12,500 in assistance, but these programs usually require a minimum credit score of 620. If you are looking to raise your score before applying, focus on paying down credit card balances, ideally to 10% of your limits. Avoid opening new accounts or closing old ones. You can also dispute genuine errors. Through a lender-ordered rapid rescore, your balances can update in just 3 to 7 business days. Remember, mortgage lenders pull FICO scores 2, 4, and 5 from the 3 bureaus and use your middle score. This is the critical number that determines your loan program and your pricing. Ultimately, the best step is to have your lender perform a tri-merge pull. This will show you exactly where you stand and which programs are already available to you. Written and reviewed by Joel Lobb, mortgage broker, NMLS number 57916. Evo Mortgage, company NMLS 1738461. Sources: HUD Handbook 4000.1, KHC Mortgage FAQs, USDA Rural Development. Last updated August 12, 2026. Equal housing lender. This is general information, not a loan approval or commitment to lend.